Today we saw the stock market making another new all-time high. However, is this setting up a major trap? If you trade the futures markets, you want to watch until the end. Now we come over and look at how the indices fared across the board today. The Dow was up 617 points. Nasdaq was up 157 points. S&P 500 up 55 points, with the Russell 2000 being up 4.34. When we look at advancing issues versus declining, overwhelmingly, we had more issues advancing on the day, 74.6 to be exact. Then when we come over and look at the sectors across the board, only one sector was in the red. That was energy, and that should be good for us, the consumer, not only making it cheaper for us to fill up the gas tanks, but also helping out inflation. Now, speaking of inflation real quick, CPI report shows accelerated inflation in August. It's probably not enough to stop a rate cut. And if we come over and we look, we only have 5 more days until the next FOMC meeting, and we can see there's still a 92% chance the Fed will be cutting rates by 25 basis points at the next meeting. However, when we look right here, consumer prices rose at an annual rate of 2.9% in August as weekly jobless claims also jump. So we come over and look at a chart of the CPI report real quick. Notice this is on the move up. This is not what we want to see. And the fact that the market was able to be as bullish as it was could be a major trap. It could have something to do with what's going to come out in roughly 1 week in time. And no, I'm not talking about the FOMC. We'll talk about that here in just a bit. But you can see 0.4. But I want to remind you guys, anytime we look at the CPI report, and this is something I failed to mention in yesterday's video, but we want to keep in mind the CPI report is a statistical estimate that is subject to sampling and error. So again, even though they give us a report, it does not necessarily mean it's accurate. Then if we come up here real quick and we look at what was the big takeaways, well, I would have thought that all energy would have been down. Well, that's not true, because if we look at gasoline actually rose 1.9. However, and if we look at this category, we did have fuel oil down a little bit, energy services down a little bit. We had utility gas services down a little bit. And then right down here, it looks like medical care commodities and medical care services. Every other one actually saw an increase on the month. Then as we come over and look at the fear and greed index, right now we see have a reading of 53. So if everything is so good and the markets are making new all-time highs, why is the fear and greed index not back over into greedy territory? Then we come over and look at the most recent investor sentiment survey. Look at the bullishness. This is the second week back to back. We're seeing a drop in bullishness. From last week, it was 32.7. This week, 28.00. Then look at the bears out there, 49.5%. And the prior week was 43.4. September historically is a bad month. However, don't tell the bulls that at this moment. So now we come over and look at the SPY. We saw it making a new all-time high today. We look at the Dow Jones making new all-time high today. We come over and look at the Qs real quick. Qs right there making a new all-time high. But then as we come over and look at the dollar index was down today. And again, that's a play on next week when the Fed is going to be cutting rates. Now, with the dollar index being down, we come over and look at gold. It's probably making new all-time highs, right? Well, not so quick. You can see now we've had that shooting star type of candle. We had a candle from the prior day, wick on the top, wick on the bottom. And then today actually forming a hammer candle at the upper end of the range. And again, this could all be part of a little distribution on the way down, coming back down towards some of those levels we spoke about in yesterday's video, the 38% retracement down towards the 50% Fibonacci levels. Now, when we jump over real quick, when we take a look at the SPY, on the daily chart, this looks like a very bullish candle. But then we look down and look at the MACD indicator. Does it look bullish? Absolutely not. And at some point, we will start to see a pullback in this market. We look at the 4-hour chart, MACD indicator looking pretty good at this moment. Good separation of the two lines. But then on the 30-minute chart, notice we had the gap up this morning, and then we continue to go sideways from that point on. Now, this is something to note. The prior day, we gapped up. We barely missed filling the gap, and then we gapped up for a second day. If tomorrow we gap up, you guys know the MO, I'll be looking on the sell side. Also, pay attention to the MACD indicator. What's it doing? We're way above the zero line, and it's trying to make a cross, which could see further prices decline out here tomorrow. And what makes this really strange, right? Not only do we get the CPI report come out today, and if look, the core CPI month over month came in at 0.3, right in line with expectation. But then we look at the CPI month over month came in at 0.4, hotter than the forecast of 0.3, hotter than the previous reading of 0.2, and then year over year rose to 2.9 from 2.7. So don't believe all that hype about inflation is going away. Then we look at the weekly unemployment claims. Notice we had a reading of 263 new filings. That is up from the forecasted of 235, previously 236. Again, this is something that Powell's been worried about, was a softening of the labor market, but the S&P 500 was still able to march on up. Now, I'll let you guys know right now, Apex 7A massive 80% off, pass in as little as 1 day, like I did today live on stream. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, when we come over real quick and we take a look at the futures markets, what do we got over here on the 4-hour chart? Just a rocket ship on the way up. Now, I do want to bring to your attention, we do have this larger A to B equals C to D pattern that could be in play, and the price completion on that is 66.21. Well, you know what? We're really not all that far away from that price at this point in time. Now, at some point, I do think we'll come back and visit this zone, which is something we talked about on the live stream. If you guys don't want to miss the next time I go live, make sure you're subscribed and hit the bell notifications turned on for all. But essentially, prior high down here towards the candle bodies. In this zone, I basically mapped out off the 30-minute chart, but I do think we're going to come back towards it. Also, if you look on the profile, very poor market structure over there, meaning we had an inefficiency in the market. We come over, look at the 30-minute volume profiles, and notice we had the big push up, and then we just basically held out near the highs. So do we get a push up tomorrow and then start to come back down? Because if we look at the economic calendar for tomorrow, what is on deck? Well, at 10 a.m., we have preliminary consumer sentiment followed by preliminary inflation expectations. However, I want to warn you guys real quick, you know, that news could lead to a trend type of day. And since today was already as bullish as it was, I don't know that that trend would necessarily be up. And if you are a trader that likes to trade in the futures markets, you're going to want to stay tuned because I got something I want to share for you that would be very important for tomorrow and Monday. But if we look at the volume profiles tonight, if we start breaking above value area high, 65, 98.5, and then we start coming down, I want to target that point of control. I want to target down towards value area low. I want to target this minus development area, which is also right around the prior day's high. And that minus development area will come in about 65, 65 and a half down here to about 65, 64. Now, if you trade the futures markets, this is going to be important. Next week, we have triple witching come up and we're in the process of contract rollover. So you want to go over to the cmegroup.com and scroll down here. If you trade any of these indices, the ES, the Nasdaq, Dow, or even the Russell 2000, you want to see which contract has the most volume. Well, let's come over and look at the ES real quick. I'm going to simply click right over there, click right over here where it says quotes. And then now let's go ahead and compare the different months, because today on the live stream, I was getting asked questions. Mike, are you rolling over the contract? I said, not yet. I'll probably do it either Friday or I'll do it Sunday before the market opens, but I want to see where the volume is. Well, today we had 1.2 million contracts traded for the September contract. So for me, I still want to trade the contract that has the most amount of volume. That'll help minimize the slippage that we get in trades. The December contract had 111,000 contracts traded. So not even in the ballpark. This is less than 10% than what we saw actually traded for the front month. Now, if we come over and look at the Qs real quick, notice the Qs notched out another new all-time high. So if you're monitoring the fibs, we got to redraw them. All right, we got to go ahead and shift the fibs a little bit up higher. When we start to get the pullback, we're going to want to focus on the 38% retracement. Now, is that going to be tomorrow? Fridays tend to be more bullish than bearish. We're going to have to wait and see. On the 4-hour chart, what do we got going on over here? MACD indicator still looks extremely strong on the 4-hour chart. However, we look at the 30-minute chart, that's a little bit of a different story. You saw we had that gap up, and then we had this big consolidation throughout the afternoon. Notice the MACD indicator trying to roll over, but I want to caution you on this. If we do get a bearish cross, yes, that increases the probabilities we'll get some type of pullback. Now, is it a pullback to come down and test gap support, or will we go all the way down and fill the entire gap? Also note, if we stay up here at this level, we get a bearish cross to the MACD indicator and it works its way down towards the zero line, but we're still consolidating up here. Watch out, that could be nothing more than a recharge point for another move higher in this market. Now, we come over and look at the 4-hour chart for the Nasdaq futures. Not only are we above the prior week's value area high, but we're also above the developing value area high at this point in time, aka the path of least resistance is higher. We have all-time highs not that far away. And if we zoom this back here just a bit, all-time highs on the Nasdaq is going to be 24,000 68.50. We can see the high from today, 24,044 and a half. Nope, 24,046 is the high today. So we're a little bit shy. So I would not be the slightest bit surprised to see the market shoot up tonight, take out all-time highs, and then we'll see if we turn right back down. Now we come over and look at the daily profiles on the 30-minute chart. We can see here was the CPI data release. Now, if you guys joined me during the live stream, you saw how I was able to pass some Apex accounts in a mere matter of seconds. And we had that quick wick down. And then from that point on, there was simply no looking back. Now, if you look at value area high, that's going to be up here at 24,043 and a quarter. So tonight, if we start breaking above it, wait and see, can we get back below it? If so, then I'd want to target the point of control. Then we can maybe target this minus development area about 23,994, then value area low. And then from there, can we go back and re-challenge the lows from today? And then maybe start working all the way down here to this point of control. Keep in mind, next week we have the FOMC, and we also have triple witching coming out next week as well. Now, if you got traded with prop firms, you want to check out the shocking truth about Take Profit Trader.